The PayPal stock has performed quite poorly so far this year. We want to take a look at why that is from a fundamental point of view, but also from a chart point of view. And I want to share with you the Elliott wave pattern, and I want to show you how this stock could be traded. Let's go. Hello and welcome to another video by MCO. My name is Ben and I'm the founder of MCO Global. Today we want to take a look at the PayPal chart. We take a look at an article. We take a look at the last earnings. You know, what came out of this, and is there actually a fundamental reason for the sell-off that's happening at the moment? I also want to share with you from an Elliott wave point of view how this stock could be traded. What are the trade setups that I see, and I will tell you how I intend to trade PayPal. I don't want to waste any time, so I think we take a look at the at some fundamental data around PayPal. On our website, there's an article about PayPal. Is the PayPal stock a buying opportunity after the recent drop? Was published today. I want to share a few things from here, and I will link it in the video description as well in case you want to take a look at it in your own time. So first of all, you know, PayPal, you might not know all the details around PayPal, so I want to just take a very brief look at it, then we take a look at the chart, and I will share with you how it could be traded. Yeah, I'm not going to give you financial advice, but I'm telling you what would generally be reasonable from an Elliott wave trader point of view, and I also tell you at the end how I intend to play this. So PayPal is one of the most established digital payment payment platforms globally. Founded in 1998, the company has been a pioneer in online payments, providing secure and efficient transaction solutions for individuals and businesses, operating in over 200 countries. It serves more than 430 million active accounts and processes billions of transactions annually. The company generates approximately 90% of its revenue from transaction fees. So whenever you buy something, sell something with PayPal, eBay, whatever, these transaction fees, they obviously get a fee for each transaction. That's their main income, with additional income from services like Venmo, credit offerings, and value-added financial products. Despite growing competition, and the competition is strong in that space, yeah? Despite growing competition and traditional banks, PayPal remains a dominant player due to its strong brand, extensive user base, and continuous innovation in digital finance. Now, what are some fundamental aspects? So I think it's always worth to just get a little bit of, we don't do a full fundamental analysis. I mean, I could do it, but I mainly am focusing usually on the Elliott wave structures. I'm a technical analyst. I'm also a doctor of business administration. I absolutely can read balance sheets. I absolutely can do a full fundamental analysis of a company, but it's just not what I do, because from my point of view, for trading and even for, let's say, investing, good trade setups depend on the technicals. Now, when I'm really investing in a company, then I want to know about the fundamentals. At least I want to know what they're doing. I want to know roughly what the outlook is. From a trading point of view, I don't care. I could trade a chart of a company that basically goes bankrupt. If I have a stop in place and I know the technicals, then it could still be a decent trade setup. Whereas if I'm investing in the long run, or for the long run, I want to know what's going on with the company. That's sort of the difference. But yeah, here the focus on this channel is more on Elliott wave analysis, but we do a bit of a deeper dive, because what I like to do is to take a look at what's going on currently, overall, what are the things that are shaping market sentiment, and then we want to see, can we actually see this stuff on the price chart? Yeah? Is there a lot of uncertainty? Well, that would be a wave 4 or a correction, right? Is there a lot of fear? That would be a wave 2. Is there a lot of FOMO? Is everybody saying buy, buy, buy? It would be a third wave. So this is sort of what we typically see. We don't need to look at the news. We look at the charts and I tell you what the news is. It's quite interesting. And it's not always like that, but very often. But anyway, so just briefly, what's going on here. PayPal stock has seen volatility rising nearly 40% in 2024, but falling over 10% in 2025, underperforming the general market. The cash flow levels, I'm not going to read everything out. You can take a look at it in your own time. I want to keep it, we've got something to do here today. We've got an agenda, but the cash flow levels that PayPal has provide significant financial flexibility for share repurchases. That's what they do. investments and strategic growth initiatives, so healthy cash flow levels, yeah. Record adjusted free cash flow of 2.1 billion in Q4. PayPal repurchased, this is interesting. PayPal repurchased 1.2 billion worth of shares in Q4 alone, bringing its total 2024 buybacks to 6 billion. And this aggressive capital return strategy, so it's from our article, that's sort of our opinion. This aggressive capital return strategy aims to enhance shareholder value by reducing outstanding shares and increasing earnings per share. So the idea is that at some point the selling pressure will reduce. It's already reduced, yeah? At some point, you know, they will just get exhausted, the sellers. That's the thesis, okay? But PayPal will continue to buy back. Key growth challenges, future outlook. The biggest concern is the slowdown. So they've got a slowdown in unbranded processing, which is their main part, which saw growth drop from 29% year over year to just 2% in Q4 2024. However, branded checkout and Venmo continue to grow rapidly, showing strong engagement, just their services, showing strong engagement and higher profitability per transaction. Management expect, that's important as well, management expects muted revenue growth in early 2025. So people are a bit disappointed, you know, due to Braintree renegotiations, but anticipates a stronger long-term growth trajectory once adjustments are complete. So they do a lot of restructuring. They recently, I mean, quite okay. Has it been a year? But they changed their CEO. They replaced their CEO. In my opinion, things are going in the right direction there internally. But what I wanted to highlight, you know, is PayPal, like from a traditional metrics point of view, undervalued PE ratio. So from a valuation point of view, PayPal is trading at a price to earnings ratio of 19x and a price to free cash flow ratio of 11.7x, making it one of the cheapest large cap fintech stocks. With improving profitability and record high free cash flow, the stock appears undervalued relative to historical levels and especially relative to some of these other tech stocks that have just gone up like crazy, okay? So it's sort of, you can take a look at it in your own time. This is not financial advice, just sort of some general metrics. For me, this is secondary. What counts for me is the Elliott wave count. So let's take a look at the chart and I want to share with you how this could be traded. Do I see a setup? How can it be traded? What do I do personally? And yeah, long term, I mean, this chart is interesting because it shows a, in my opinion, pretty clear 5-wave move up into the 2021 highs. It was quite clear that from here a pullback would start. I didn't cover myself PayPal at the time. I started to cover PayPal when we were in this 5th wave down. For those of you who've been following my analysis, I anticipated a reversal from this area. Can't remember if I called the low exactly or not, but I anticipated a reversal from end of 2023. And this is called a wave 2. Now, what I don't like about it is how sharp the pullback was, and the structure of the pullback isn't great. But it is important to understand that the price did hold above the critical long-term support, the 78.6 retracement, just below $50. So that is okay. From an Elliott wave point of view, if we hold above long-term support, that is seen as potentially strong. That being said, this is PayPal's first larger cycle. So it has to prove itself. It's not like we have, it's not that we have on multiple wave degrees, multiple signals of an uptrend. That's not the case. We have one rally and one higher low. It still needs to prove itself if it can sustain a long-term uptrend, which is why I wouldn't call this like a buy and hold for 10 years or something. That's not how I see it. I see it as a tech stock, as a potentially interesting, I would say probably fairly nicely or fairly reasonably valued tech stock that still has potential, whereas a lot of other tech stocks have already grown massively. People ask me, yeah, but what if the Nasdaq goes down? It is expected to get a large correction. The Nasdaq, how could PayPal go up? Well, guess what? In the entire period of 2022, when the Nasdaq was going up, actually PayPal was going down. So they're not exactly correlating. Overall, the idea is that a larger degree third wave, I mean, I'm not normally focusing on these larger degree third wave targets because you get crazy targets which are, yeah, they might be reached, but they are mainly like only how should I say, long-term mathematical projections, like $900 plus. Surely it's a mathematical projection that if we hold this low from October 2023, it's achievable, okay? So from a technical point of view, but it's too far out. Normally, what seems reasonable is 125 in the short to medium term, and then 215 as next reasonable target. And if this is the correct wave count long term, we should get to 900 plus, but that can take a while. What I find more interesting is sort of the short to medium term. It's just that this chart hasn't proven itself long term. Yeah, it just doesn't have the data. So that's why I am careful with long term outlooks, but medium term interesting, absolutely. And what we can see is from this, from the 2023 low, at some point here, I started to focus on upside, and it's been growing ever since. The price has, yeah, not paper, well, the price has. And then end of the year, 2024, we started the correction. Now, for many, that was a surprise that we started this correction, and people were looking for fundamental reasons. Now they used the earnings report as a reason, as a catalyst. Maybe it was a catalyst, but we've been watching for this wave 4 to start. If you don't, you might not know it, but we do offer a stock service, paperless analyzed at least once per week there. And this is one of the updates from December 2024. If you're interested, you can, it's linked in the description. It's our stock service. You'll find it in the video description. But the idea was, and this is from December, the idea was we were close to the end of a third wave. Yeah, and the article or the update at the time did say a wave 4 pullback could begin soon. So we were already watching for it mid-December. Yeah, mid-December. And then I think there was no confirmation until January or so, but we were watching for it. Risk was high at the end of a so-called third wave. So it didn't surprise anybody who followed the analysis. This year is actually now seen as an opportunity. It's currently just doing what it's supposed to be doing. Current idea is that we are in a fourth wave. So the idea is that if really in October 23 a low formed, we have 3 waves up. This year is seen as a wave 4. We could get one more high in a wave 5. So how could this be traded from an Elliott wave point of view? Now, I'm not saying this is the only way to do it. It is also no financial advice, of course, but it's just generally how it is recommended to trade these waves. Now, first of all, it's not a 1-2 setup. The 1-2 setups are the best setups. Well, we had it at the time, we focused on it. That was the best setup, best reward to risk ratio. What are we looking for here now? Maybe just one more rally in wave 5 of 1. Possibly into the, we can calculate that. I mean, what are we looking for in terms of targets? The way to measure that is we take the length of waves 1 and 2. And then we add a couple of fib levels to that. Because the third wave reached the 1.618. So we're looking possibly for the 200%. So yeah, $105, $106 would be a reasonable target for a fifth wave. So this is what I would aim for, yeah. Condition is we're holding 68.90. So this is support. We have a support area here. This is a wave 4 pullback. It's already quite a healthy wave 4. If we zoom in a little bit, you can see that this chart has fulfilled what it needs to do. If you're not so familiar with it, from an Elliott wave point of view, a wave 4 correction is correcting the rally of the third wave. And it's typically a 3-wave move, A, B, C. The C wave is a 5-wave move. The idea is we're now in the 5th wave. So we're pretty much at the end of that correction. We assume that we haven't got a reversal yet. So I don't have a crystal ball, but the analysis, the wave count is only a tool for me to get the relevant Fibonacci levels. And I know that below $68.90, I will probably have to start to come up with a different wave count. It would be too deep for a wave 4 to be relevant. Probably not a wave 4 then anymore. We would need to think about alternatives then. But this year, I just want to have this discussion with you just based on the assumption that this is a wave 4. So ideally, we don't see a break below 68.90. And if this is the correct assumption, it shouldn't break below it, right? So the idea is we're still in a local downtrend, but we're now in an area where a reversal could occur. And how to trade this from a reasonable, what is reasonable? Now, one strategy that is often recommended for Elliott wave traders is you're looking to buy in pullbacks normally, right? So you could, for example, start to accumulate in this support area. You might use a triangle, so you have your trading size. Obviously, you need to calculate that yourself. So whatever you want to risk in a single trade, what you choose then is to maybe buy in tranches. Yeah, but you might want to stop out at some point below 68.90. Now, that being said, that is why this is not an easy setup, because it's a wave 4. So it's also, the move up is a diagonal pattern in my opinion. So in a diagonal pattern, pullbacks can be deep. Sometimes we even get an overlap with wave 1. So the 61.8 Fibonacci retracement there is not an invalidation point. It's a level though the price shouldn't go below. If it does, it's not invalidation, so you might get a fake out. So I would rather leave it a bit more space. Yeah, well, that's one strategy. Leave it a bit more space, smaller position size to not get faked out. Another idea would be to buy in tranches, but slowly only. So you have your trading, you have your position size, but you only nibble. You buy a little bit basically in this decline, maybe a couple of purchases. You know, it's a couple of small positions, and then when we get a first reversal signal, yeah. And why you might ask, why the triangle? Because you wanna start small in this range. You see it as a range. You start small at the top, and then you buy a little larger here, a little larger there, and at some point you have your stop, and you will maybe even below that low there, and you have to stop out at some point, but you want to stop out where your position size is the largest. You don't want to do it this way, because then you buy a lot up there and only a little down here. So the triangle basically shows your position size, and that's the wrong way to do it, because then the risk is all up here and you have a massive distance to the stop. That's not how to do it. Then you might say, but then what if it turns early? I never get my large position. Well, that's why you don't want to get a full position. If you don't get a full position, the trade is working. Congratulations. You don't want a full position necessarily. Now, you can always, when the trade then turns around, the chart turns around, it rallies, breaks above a high, forms a higher low pullback. Well, then you can set a stop either here or here, right? And that is where you could scale up the trade. You scale up. You buy a little more, even more aggressively. Tighter stop, you can buy more aggressively. Obviously, all, you know, considering what is normally recommended as position size, which is normally not more than 3% of your portfolio in a single trade. Distance to stop, 3% is a lot already. But that is how it could be traded, yeah, accumulating in the decline, but this is still a falling knife. But interesting is daily RSI, relative strength index. That's why I find it interesting as well. Do I have it open, or do I need to maybe open it? Daily RSI, relative strength index, close to oversold, yeah? Oh, I actually have it already. Yeah, close to oversold, close to 30. Now that doesn't mean it has to turn around, but the last time it was around those values was in June 24, and it performed quite well from there. And the time before here, 2023. So this could be interesting. Now that being said, this is still a hot knife you try to catch if you buy now aggressively. So it might be wise to wait for a trend reversal signal, and then the price should get to around about 105.70. Even if we say, okay, let's calculate that. Let's say we buy around 73. That's currently just kind of an estimate. And we target $100, and we set a stop below the box. Well, it's a reward to risk ratio of 5. That's amazing. You even if the price goes lower, you even get a better one. Now, if you set your stop further away, that's fine as well. I mean, normally we say like a 3-to-1 reward to risk ratio is reasonable. So you give it a bit more space. Obviously, you can always buy and have a small position and then set the stop even further away. That will increase your win rate, but obviously you have a smaller position then. But this is a box with some parameters you can focus on. Okay, what happens if we break below it? If we break below it, and if it's a sustained break, then I will have to assume that this is that the diagonal is extending, okay? And there are various ways how this could play out. We would need to look at the structure then, but alternatively, we could say, okay, what if this is the wave 1, alternative wave 1, yeah? And because in a diagonal, a large diagonal, but that would still be from a bullish point of view. It would be less probable, but still valid. Then we would think about the 78.6 retracement as key support. I will give it to you now. It would be at around $57.47. So how do I intend to play this personally? Pretty much as I explained to you just now. I will start to buy a little bit early next week. Just a little bit. I will probably not have a stop set below 68.90, but I will probably stop out below 57. So I intend to give it more space, have a small position size only when accumulating initially, and then should we see a reversal like a first 1-2 setup to the upside on a smaller time frame, like a first rally and a higher low pullback, that is when I will probably add more and trade this a little bit more aggressively. Yeah, that's how I do it. So I want to get a good price, so I buy a little bit in the decline, it's not gambling. I make an informed decision because we are close to the end of an ABC structure. I'm not trying to time the absolute low here. This is accumulating in an area where, with a higher probability, the price should show a reaction. I can't rule out further lows. I actually would like to see a little lower because then the reward to risk ratio would get even better. I will start to rethink the wave count below 68.90. I will then probably stop buying and then wait to see if the price does anything down here. If not, then I will stop out. That's how I play it. I'm speculating that it will turn around here in this area. Basically, we have an oversold RSI, and it's interesting from a fundamentals point of view, in my opinion, especially for this price after the pullback. Yeah, it wasn't so interesting up here. It is now interesting again, ideally even a little lower. And yeah, ideally we see that 5-wave pattern, because if we get 5 waves, that would be really good. Then we will probably see another larger correction though in wave 2 that can take a while before really the FOMO rally happens. Now, what if we never get a wave 2? What if that never is a deep wave 2 or whatever? Well, guess what? That's why I buy now. Okay. The thing is, it is probable that we will get into the same price region again in wave 2, but I will not rely on that. Okay, so it's all about having a plan, having a game plan here. And Elliott waves help us to develop this game plan. We get probable pathways, but I also always want to trade in a way that I trade as if I'm wrong. Okay, I trade as if the analysis is wrong. That's a very powerful concept, and it all comes down to simply trading the levels, but also thinking about in the background, okay, what if I'm wrong? And that's something that is so helpful and can be a game changer for many. So that's how I see it. That's how I trade it. Let me know what you think about PayPal. Are you interested in PayPal? Do you have PayPal? Do you hold PayPal? And yeah, let me know. And hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And yeah, please also activate the notification bell and let me know any suggestions for other stocks or other video topics in the description. Thank you very much. Bye-bye.